Good morning, everyone. It's 8:06 a.m. Chicago time, 9:06 Eastern. It's Friday. Happy Friday. YouTube's got some major problems today with their one of their links, and it's been giving me fits here this morning. It seems to be coming back online, and here we are. Anyway, that's why we're late, and a lot of this stuff is not working, but lots of technical issues, so we'll get past it. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The overall market stance this morning is again bullish. Crude oil leading the pack up 41 cents. Crude is moving. It's pushing its way back to $50. Trading at 49.65 on the May crude. Remember, we rolled forward here. Crude's no longer in April. We're in May. Followed by the Euro stocks and gold, again showing strength, trading at $1,230, even up $2.90. The laggards are the Euro and the Bund, the German Bund on Eurex. Other than that, as far as news this morning, not much. It's the calendar's very light. Um, as far as what happened overnight. As far as what we're expecting going forward, we're getting the industrial production and cap utilization here in about 7 minutes for February. Industrial production expected at 0.2%, cap utilization at 75.5 again for February. The key number today is the University of Michigan confidence for March. This is the prelim number, so this is likely to be a mover. The expectation, the consensus here is 97. The prior is 96.3. We also get the leading index or index of leading indicators for the U.S. for February, and that's expected at 0.5. Also at 10 o'clock Eastern, and then of course at 1 o'clock we get Baker Hughes. As far as speakers and so on, I don't see anything. Let's take a look at what we expected yesterday as a key. So you can see here, YouTube's all these things are not coming up. The server's just not working properly. Yesterday we expected a pretty quiet open. Expected a push down into the point of control at 23.82 and then looked for a bounce. The reason I looked for a bounce is the continuation of the impulse here. I'm looking for some sort of play, or it could pull back and then continue another leg. But I was looking for a higher high over the prior day as a primary hypothesis after pulling back and finding buyers. Did not happen. Secondary hypothesis, look for an open auction, a potential attempt higher into that high volume node on the close. We have a nice little, like I pointed out yesterday, we have a nice little excess high here on the candlestick, and then the target would have been 23.78, 23.77 as the key target for Hypo 2. Again, there it is. Hypo 2 is in charge. Been like this for a while. There's the open auction. We never got the push higher. We went completely sideways, and we have a terribly poor high from yesterday. So when you look at this at 84.50, 23.84.50, multiple tops that knocked on this door 4 times and unable to break. My expectation yesterday, while we were doing our AMA here at stage 5, my expectation was for the mid to pull back into this area here, which it did, consolidate, start pushing up, and then I was looking for neutral yesterday afternoon. This is in the afternoon, after lunch Central, 1:30 Eastern. That's what I was looking for. The market ended up letting go to the downside and putting a lower low by a tick. We have what looks like a failed auction to the high side, so the expectation is for continued higher. Tough read in my opinion. It's really It's really hard to say what it's kind of like playing with the probabilities here. It's tough to say which angle the market's likely to take here, but overall, it did accomplish its goal of hitting that 77 area yesterday, and it pushed through down into 73, 75. So pushed through by about 4.25 points before rotating up. The profile is very balanced on the downside. We have a clean and clear LVN from yesterday's action, which happens to be last night's high. The overnight high is 81. The key low volume node is at 8150. The 8150 comes from the opening swing low, which was double confirmed here. So we had an opening swing pullback, push, pull down again, pull back to it, push, and then failure down, and then it got us into the mid here, mid VWAP, and at the time it was point of control. So that had some teeth to it on the short side, but the expectation was it wasn't likely to continue lower, which it did. So lots of wrongs there. Lots of wrongs there, and it just seemed to sit sideways. This morning we're trading inside of value, inside of the key lower distribution. And then it's a fairly quiet morning. There's not much on the calendar, again, as I said, except for the Michigan sentiment prelim and leading indicators, and I expect that it's not likely to move out of here very easily. Yesterday was a rest day. It was an inside day, inside of the FOMC day, and we didn't really accomplish much other than to push lower. Now, the bigger picture, just so we don't lose sight here, the bigger picture, if we look, I created this outline, this MC point of control, the MC composite here, profile, and shifted this forward to see where the volume is, where the market's attacking. And as you can see here, we're forming a very sharp point of control up here. The current point of control is still below us. Okay, it's still at 67.75. It looks like it wants to shift up to 78, and that's where we are today. Yesterday's point of control is 76.75, so it's building value higher is what this profile is telling us. It's accepting value higher, and in my opinion, this pattern that I talked about all week, this drop, reverse, higher low, push, pull back, and then the expectation is a continued push higher. Yesterday, we got the 74 on the dot. See that 74? We got to 73.75. We bounced up. We came back to 73.50. We bounced up again. So resistance here on the gap up day last Friday. The non-farm Friday is acting as support, and I expect that the rotation is going to continue higher. Again, that's what we did yesterday. Let me get rid of this trend line. That's what we did yesterday. We basically broke through, pulled back to the 74 here, and then we're bouncing up, and the expectation is it's likely to continue higher. Next target up is 93.50 and a new all-time highs. And so that's what's setting up right now, okay, or appears to be. The overnight session, not much going on. I mean, it drifted sideways throughout the Asian session, just a small zipper there, and then it sold off a little bit on the European session. Didn't accomplish much. It went right to value low from yesterday, and then we're pushing against value high and the LVN, as I mentioned, right now. I expect today to be very kind of quiet and non-productive day in the auction. I'm not expecting it to run, although I'd love to be surprised today. I'd love to see us make a run for it, but overall, not expecting very, very much today. Looks like the industrial production numbers came in weak, 0.0% versus 0.2%. In case you're wondering where I get my information, this is my news feed panel here, trade the news, and it gives it to you in real time, and it also squawks it out. That's what you're hearing in the background. Um, Overall, this is where we are. Now, because it's the end of the week, let's take a look at what we accomplished this week. Okay, so just so we know what the big picture story is. This is what we've done. We've started the week out right up here. We tested down, and then we moved up on Wednesday, and here we are on Thursday. Uh, Yesterday left a week high. You could see that double top, double TPO high. That's a week high. That's a very technical week high. Overall, the market closed right in the bulk of yesterday. And so any push higher over the LVN here is likely to target the next area up, which is the high of Wednesday, and then above there would likely be the point of control that I'd mentioned earlier. I don't believe the market is likely to pull back here very much. I think it's likely to fight and hold these prices up here. We have made a very clear attempt at the low here. If you look at the volume on this MC down here, look at how this was formed. Look at how it was retested right here. It just retested this area right there. Look at how we held the 74 yesterday. 74 is really key to the market continuing its move higher. So if it pushes through the 74, it opens up other areas, 67, 75 first of all, and then it puts us back in balance as opposed to in a reversal mode for a bullish reversal. So overall, I think, as I mentioned Monday, very, very clearly pre-market, that if you are short, you have got to hedge your position or lighten up on a swing basis. It's not a good week for shorts, and it definitely has not been a good week for shorts. We've moved a fair amount, about 30-something points higher since Monday. So it's just playing out. This is a typical market pattern. Playing out in the long run. The numbers for the FOMC SOC, which is the scene of the crime, or the price at which the news hit the market. This is where the auction got interrupted by the news. Is at 71 and a quarter. 71 and a quarter is marked here. You can see it on your flex levels right there. 71 and a quarter is where we launched from. That area has not been retested yet. Actually, it has. It pushed higher. Let's see. No, it has not been retested. So that area is still due for a test. The FOMC high immediately after the release, which is right here, is right up at 2381, and the low is really tight beneath the SOC at 2370. Again, that just gives us areas to target if we break through the 74. The 74 is the area to watch this morning. Let's take a look at our hypos and get everybody on their way here on their Friday. This morning, we're opening right in range in value. The expectation, again, I don't have any other ideas for the auction other than for the market to test lower, look for buyers, base, and then look for a higher low, and then to start moving up again. That's the expectation. That's the primary expectation, the most likely play. Doesn't mean that that's what it'll do, but that's what I would expect. So I'm going to look and take stabs at the long as we approach the point of control 76.75. The catch with the point of control long is that it's likely to be turbulent. A point of control indicates an agreement or consensus on value, and if there's an agreement and consensus on value, it's likely to churn. It's a price, a point of control in its very basic definition. A point of control is a price in which the market perceived value, and a lot of trading took place. It would not take place if it did not perceive that value. That's the primary hypothesis. Just understand that if you get in on this area, it's probably a scale-in area, and your key target once you're in is this 81.50, 81 quarter LVN. That's the big gatekeeper on the top side. The gatekeeper on the downside again is the 74 area right down here. Okay, the secondary hypothesis, as you would guess, attempt higher, push to 81, potentially through, pull back to 81.50, and then start to move down. First target 76.75, and then start working its way to 74 here as the key target to hit below. That would be hypo 2. I'll leave you with just two hypos today. Oh, it didn't like that circle. I'll leave you with just the two hypos today to work with. I want to remind you that it is Like Friday. Please hit the like button as you're heading out. If you don't see the like button or the thumbs up button on your screen, hit the YouTube button at the bottom right. That takes you to the YouTube version of the page, and then from there hit the like button, please. It does help us out when we need help from YouTube. It's a free service, and they pay attention to those who are in demand, and your likes show that there is demand. Okay, and remember, it is Friday. It's Friday. It's not a good day to stake a huge amount of your a huge portion of your account for one or two silly trades that didn't work out. Remember, every single trade, please remember this, every single trade has a 50-50 outcome. Every single trade. It doesn't matter what the past has done. The only outcome that can come out of every single trade is a win or a loss, and the distribution of those wins and losses are random, are statistically random. So you cannot sit there and marry one single trade. Your goal is to hold it long enough to assess. Um, uh, you need to hold the trade long enough to assess whether or not it still fits your plan. If it doesn't fit your plan, cut it so that you can get another 50-50 chance on the next trade, rather than adding and holding on and praying and hoping and getting on your knees and, Hail Marys and all that stuff. It doesn't make sense. There's no career in that. So Friday's the day where most people get trapped. Most of the time, the traders that did the worst for me did so on a Friday, because they're trying to make money when there's not much going on in the market, and they're trying to force positions into the weekend. It just destroys their confidence, and that's the expensive part. It's not the loss in your account. It's the emotional loss or the loss of hopefulness that is necessary for you to have confidence in your ability to trade. Good luck, and I'll catch you on Monday. Take care.